The European Central Bank announcing a host of stimulus measures from interest rate cuts to more monthly bond purchases. Let's go straight to London now, where we find James Hughes, the chief market analyst at GKFX. And James, let's begin with this deposit rate. The European Central Bank cutting that rate from negative 0.3% to negative 0.4%, so deeper into negative territory. What's the rationale there?
Well, I think this was widely expected, this one. I think we were trying to really factor in and price in some kind of movement in this rate. I mean, in terms of the rationale behind this one, it's hard to fathom a lot of the rationale behind a lot of what the ECB has done, apart from the fact that, of course, number one, it was expected by the wider market, and number two, the inflation is still low, GDP is still low, and everything around the whole spectrum of the ECB is still not necessarily performing. So there's that feeling of more needed to be done anyway. So we'd already seen the deposit rate cut beforehand. Cutting that further could, of course, help to push the measures just that little bit, that extra step further. But I don't really think that cutting, and again, we're talking by a minuscule amount, so we're talking a 0.1 or 10 basis point cut in that. And now that isn't necessarily going to do too much in terms of the grand scheme of things when we're already at negative 0.3. What's negative 0.4?
And the ECB also cut the main refinancing rate. So this begs the question, will these rate cuts help to lift inflation in the Eurozone, which, as you know, is far from the ECB's 2% target?
Yeah, I mean, I think one of the interesting things is, if you look at the asset purchasing programme in general, about a year ago we saw this initially put in 60 billion euro budget per month in terms of that initially. Now, back when we did that, we saw euro dollar around 110. We saw the DAX at about 11,500 or so 12 months ago. Now, 12 months down the line, inflation is in the same position, if not slightly worse. GDP is not necessarily in the right position. The DAX is 2,000 points lower than where it was before, and euro dollar is about the same place. So in terms of cutting the rates, what's interesting is, are we now going to have a floor? Does this open up for further negative rates? And is it going to help inflation go higher? Well, in the past, it hasn't helped up to now, and moving it by this small amount, you'd have to say that it isn't necessarily going to help going forward. But then again, the ECB is running out of tools.
Well, one of the other things the ECB did was expand the monthly pace of asset purchases to 80 billion euros from 60 billion. But here's the other caveat. It's now going to include corporate bonds. How do you think this will impact inflation and growth in the Eurozone?
Yeah, well, of course, this is another way to broaden this out, of course. And this was, again, something that was expected within the market. We expected to see some kind of broadening of this. We knew it was government bonds beforehand, but the moving into corporate bonds is something that we maybe expected in December. And, of course, you have to remember, in December, the markets were so majorly disappointed by what they saw from the ECB that now really needed to be the time when everything but the kitchen sink was really thrown at the ECB problem. Now, is it going to drag inflation higher? Is it going to help the growth forecast? Now, the question, the whole point is that if it doesn't, then what really could? So this is almost, it feels a little bit like it's one of the final rolls of the dice for the ECB. The big question is now, if we go on in a couple of months and growth isn't moving and inflation isn't moving in the right direction, what is the next step? And I think that's more the worrying point, rather than is this going to work this time?
All right, so their hands are tied to a certain extent. And of course, we'll be watching the Federal Reserve's March meeting next week. James Hughes, the chief market analyst at GKFX in London. James, thank you.
Thank you.
I'm Scott Gamm, and you're watching The Street.